Hey guys, have you ever thought that you need to be a genius to be a good trader? Just this past week, I was speaking with a young man and he said to me, he goes, "Oh, I couldn't learn that stock market stuff. I'm not smart enough." Little did he realize that by uttering those words, he reinforces a false belief. And that false belief is likely to impact the prosperity of his family for generations. So, what if I told you that this belief might be holding you back? Uh, the more you realize today, we're going to bust up in this myth and a lot more. And I'm really excited because Mike's going to introduce our guest today, and this guy is he is a coach of many things. Go ahead, Mike.
Yeah, absolutely. Akil and I have known each other for a little while. Um, so, Akil Stokes, full-time trader, trading coach over at Tier 1 Trading. His journey in the financial market started way back in 2007 when he was introduced to the stock market. Akil soon fell in love with investing and made the jump to penny stocks and the Forex market. After struggling for years and quitting 3 jobs in the process, he eventually found mentorship and was able to right the ship. After a brief period of managing accounts for others, Akil discovered his passion for coaching and has been doing so ever since. He's had the luxury of working with traders from 120 different countries worldwide and feels truly blessed to be doing something he loves for a living. Beyond trading, Akil enjoys spending time with his wife and 2 young children, and he also coaches track and field at a local university. You can check out his website over at tier1trading.com and listen to his insights on the Trading Coach podcast. People just call him Akil. Welcome to the show, Akil.
Hey guys, thanks for having me. Awesome opportunity here. I'm pumped about talking to both of you guys. I love the podcast and I'm excited to be a part of it.
That is
Thanks so
so.
much for being here.
Yeah, really, without a doubt. And but whoever's watching us out there, make sure you let us know where you're watching from. I appreciate that. And also, if you have any questions you want us to dig into, please let us know what those are also. But we're not going to let any moss grow on this rock. And so, Anil, let's jump right into it. Many folks do believe that only high intelligent individuals can succeed in trading. So why do you think this myth is so prevalent?
Well, I could tell you that it's not true because I made it and I am not the highest of intelligence. All seriousness, though, I'm not dumb by any means, but I think the myth is brought up by just how our beliefs are shaped. And I know I was like this. I've spoken to many traders who are like this as well. If you go back and you look at the traditional way of getting into the market, it's not retail trading. It's not trading on your own. It's working for a firm. It's working on Wall Street. And where do these Wall Street people come from? Well, they come from Ivy League schools, which are the top of the top schools here in the US. So, many traders are brought up, including myself, thinking that, okay, well, I got a D+ in macro and microeconomics in college. I go to a state school, which is a cheaper alternative, but not a Penn, a Princeton. I can't be that. I can't be a trader. And the reality is, it isn't necessarily book smarts that makes you a good trader. It's all the other elements that go involved with it. It's discipline. It's the ability to, put 2 and 2 together. It's strategy development. We're all athletes here. It's being able to create a plan, stick to the plan, adjust the plan when it's not going your way. And you don't necessarily need an Ivy League degree to do that. And, one of the books that helped me a lot in this as well was Market Wizards, where Market Wizards, if you're not familiar, it took a look at, and there's many in the series, but the initial one at least took a look at many of the greatest traders in history. And that was one of the books that cracked this myth for me, or debunked it for me, because I read it and I'm like, oh, not all of these guys are the way I thought they would. And it kind of gave me belief that, man, like I can do the same thing as well.
Right on.
Interesting.
Hey,
Any of them jump out at you? Any of those market wizards?
I forgot the guy's name, but I remember this story because keep in mind, I'm reading this book while I'm struggling, and I'm thinking I'm a loser. I'm thinking I'm not ready. I don't deserve it. All the negative thoughts, and I'm kind of on my last limbs, like just finding any type of book I can to hopefully find that super secret strategy. And I don't remember his name, but I remember it was a trader who had lost everything in the market. And he had to go, he snuck into like a back alleyway or a fire escape, and he had to call his mother and ask for a loan so that he can get back in the market. And I don't know about you guys, but like calling my mom for help is like, that is like the last thing I ever want to do. Like I would rather struggle and fail on my own than call mommy for help. So to see this guy, this professional trader, someone that went on to be one of the best, be in a position where he's like down bad and aside from robbing and stealing banks, a last ditch effort to get back in, gave me belief like, man, I can be bad too, and that I can overcome this as well. And that story really made me believe that there is hope no matter how poor your situation is.
Yeah, right on. The other side of the question about, people thinking that they're not smart enough are the students, and I know you coach people, Mike and I both coach people, is occasionally the ones who come along and who are too smart to learn. Now, I mean, that's the other end of the spectrum. And so what do you think the mindset, the mechanics of what they're believing about themselves that puts them in a position that they're too smart to learn and they won't listen to what you say as a coach?
So I've read a lot about this, and I've had some very good talks with some of the best trading psychologists out there on this topic. And it was interesting where they all mentioned that, on the other side of the spectrum, the people that are super, super smart, too smart to learn, often struggle more than, the regular person, I guess you can say. And I think it stems from this, right? And again, I don't have experience doing this, but we all know that person that we grew up with in school that knows everything. They get 100% all the time on the test. They get everything right. They're never wrong. Like they are used to, and they are trained to be right, to be right, to be right, to be right. There's something positive in being wrong if you do it the right way, right? You could either be wrong and just be like, I'm stupid, I'm dumb, or you could be wrong and learn how to learn from it. Like, oh man, I got the question wrong. Let me go back and figure out what I did so I don't get it wrong next time. And people who are in that boat, they earn a very valuable skill, and especially in trading, because we know that the markets are irrational. We can do everything right and still be wrong. And I think the people that are super smart, they don't know how to deal with that. They are used to, I did everything right. Like it should be right. This should be a winning trade. And they can't comprehend like what do you mean I'm right and this didn't work out? They don't know how to deal with it. Where on the other side, we can look at something and understand that, hey, we've been wrong before. Like sometimes you're going to be wrong. And we also know that skill of how to fix and go about learning something when we're wrong, where like you said, the people that are super smart and maybe unteachable or harder to teach, it's harder for them to kind of admit like, I was wrong. I need help. I need to listen, because that skill just hasn't been developed based on where they're at in their life.
Wow, that is a great answer. Go ahead, Mike.
Yeah, no, so it sounds like they're looking at this game not in terms of probabilities, but is in something where there is a definitive right or wrong, and the way that you determine that is based on the outcome of this particular trade versus say, all right, I've got a string of 10 trades, 20 trades, and well, if I got all of them wrong, well, that's a problem. But if I at least got 50-50, then I might have a winning system.
Yeah, I got a good example. My kid had a soccer tournament this weekend, and they didn't end up making the finals, but like they played really, really well. And we had to tell them like, man, like sometimes you play well and the other team is just better. Like you take pride and like you did everything you could do. You guys didn't make any mistakes. Like you maxed out, and the other team, they were bigger, they were stronger, they were faster. They were just better. And that's not a negative. You're not a loser. And trying to teach that skill of understanding like I said, the kind of the process is more important than the outcome. And if you keep doing things the right way, you will get the outcome you want more times than not in the bigger picture. Hard to understand that when you've never experienced it.
It just gave me a really good question, and I'm debating in my mind if I want to ask it now or save it for later, because it's related to the athletic coaching versus trading coaching. All right, I guess cat's out of the bag. All right, so
yeah, well, we can save that, Mike. Why don't we save that one for later? And we're gonna, and let Akil address that, and that way, we will do that later. I mean, because we want to make sure that that this is called a tease, guys.
That's a good one.
Okay, it's called a tease. Because we want you to hang around and we want you to basically check it out. But that's a darn good question. Which is easier to coach? Athletes or traders? But
all right, then you go with the next one, Dennis, and I'm gonna jot this down so I don't forget.
Okay, don't forget. Yeah, don't forget. And so, what advice would you give someone who feels intimidated by all the technical jargon, the complexity of trading? How do you help them simplify?
Well, I'll tell you what, that is my superpower. And I've grown up, I've always had a simple mind. I'm intelligent, but for me, I learn stuff when it's in simple form. So I have this skill of making the complicated simple. And it wasn't helpful in like elementary school if the teachers yelled at me, but outside of school became very helpful. I would first start off by saying that you don't need to know everything. You don't need to master everything. There's so much jargon. There's so many ways to be successful in trading out there. That's going to be impossible to be great at everything. What you want to do is discover what you want to be good at, what is relevant to the trading path that you're on. And you want to become as good as possible at those elements, understanding that it's a forever learning journey. But I would say to try to simplify the best you can. There are a lot of educators out there that they overcomplicate things, and they do so to make you feel inferior, whether it's to sell you something or to I remember having so many meetings with people that handle like my personal investments, where we're sitting down like retirement plans, and they're going through all this jargon because they want to make it seem, they don't know who I am, but they want to make it seem like, oh, you can't do this by yourself, you need our help. And I'm just like, well, that's more risky. That's less risky. How about we just do that? And they're like, So I think that's part of the game.
Yeah.
But yeah, try to simplify it. Put it into your own words. Put it into your own story if you can. I'm a big visual person, so when I read the markets, I like creating a story around it, and that helps me understand it. So try to figure out what specifically works for you, and understand that just because you're not saying the big technical words doesn't make you any less of a trader.
Yeah, because it's kind of fun on those, financial advisors and that kind of stuff. It is so much fun occasionally to just, run up the BS flag. They don't know, but you just tell us, let me raise this flag here. Anyway, that's an awesome response. So, you made a statement a couple of weeks ago, and you were talking about let me find it. You utilize in your coaching the concept, the hierarchy of competence. Yeah, and it's similar to the Dunning-Kruger effect. Can you walk us through what a beginning trader, where he starts or she starts, and those aspects of the hierarchy of competence and or the Dunning? Because you and I had a little bit of a joke about people who get stuck on top of Mount Stupid, and
Love that.
because
So I love that. That made my day.
Anyway, so yeah, so how do you utilize that in your coaching, and how can somebody use that for both trading but also life?
Yeah, I think it's very similar in both, and obviously it wasn't created for trading; it was created for life in general first, and it's kind of been adapted to trading and really anything in life. But I think it's important, just first and foremost, to be aware of the stages you have to go through. I always think like if a blind journey is a lot harder than like a guided journey, meaning like if you have a map that tells you, you know, you're starting here, you want to get there, but you got to cross this path and duck under that and avoid this monster. Like at least you know, so it's not like a surprise. You get into trouble when there's a surprise and you know you quit and stuff like that. So I think it's important to understand these concepts, and the 4 stages are, it's always struggle for me. It's unconscious incompetence. There is conscious incompetence. There is conscious competence. There we go. And then there's unconscious competence. And the unconscious incompetence is you don't know what you don't know. I'm a father of two used to be younger kids. Now they're older now, 9 and 5. But, you know, you learn this growing up with kids that, you know, they don't know what they don't know. You know, my kid is going over to touch a hot stove and I'm pulling his hand back. And the first thought that goes to my mind is like, you idiot. Like, why would you do that? And then I'm realizing like, he doesn't know it's hot. He's never experienced this. Dad has burnt his hands and learned. So like, you can't fault them for not knowing what they're not knowing. And in the trading world, this is, you know, you usually fall in love with the first thing that makes sense. And unfortunately, you know, we spoke about there's so much junk out there and so many myths out there on the internet that you hear something and you don't know if it's true or not. I'm not smart enough to do this, so I guess I'm not. And you believe it. Once you make it past that stage, if you make it past that stage, you can be stuck on that stage and just get defeated and quit. And a lot of traders do that. However, many traders will start asking themselves, okay, like, I understand that I don't know what I don't know. Like, I don't understand this stuff. And then they embark on the journey of, okay, well, how can I go about understanding? And this is like that search for knowledge. And again, it's podcasts like this, it's the internet, it's YouTube, it's books, wherever you want to go to, but they're on this search for knowledge and they're trying to acquire as much information as possible. And again, there are some, you know, downfalls of that as well, information overload. And then like we talk about, there's so many terms that it just gives you mind fog, but at least you're trying to learn. And that is going to be that conscious incompetent stage where you're aware that you don't know. So the first stage is, I don't know what I don't know. The second stage is, I'm aware that I don't know stuff and I need to go learn it.
Right.
You learn that stuff. And this stage can take a while because you got to learn stuff. You got to separate the good from the bad. And you know, it takes time. Then you're in that conscious, you're in that conscious, oh, this always when I get wrong. You're in that conscious competence stage where you know, like, I know what I'm supposed to do. Doing it, that's a different story. And you see a lot of that with trading psychology, or I'm sure you guys work with a lot of people where it's like, I was supposed to take that trade. Well, why didn't you? Well, I got a little scared, you know, or I got a little greedy and took that trade when I'm not supposed to. It's, you know, working out the trading psychology aspects of it. And then finally, the golden stage that you want to get to, this is the unconscious competence. This is when you know what you know, and you know it so well you're on autopilot. So we spoke about, you know, being football players earlier, and this is like you know, Tom Brady at the end of his career, or Peyton Manning, where they can just like, they've seen every single defense before. They don't even know they're going through reads. They just drop back and they're automatically doing it. The ball comes out and it's a touchdown. And it's like, Peyton, what did you do? It's like, I don't know. I just, you know, they're robots. And
right on.
This is where like trading gets boring, where people say like, oh, trading was boring today because you're coming in and you're doing the same routine over and over again, to the point where it's just like, it's just a habit. And that's the ultimate level you want to get to.
That's awesome. So, Mike,
do you think that the habits ever need to change when you get to that level, or is it kind of you're in there? Or what have you experienced?
I think a little bit of both. Because we always want to learn, and we always want to challenge ourselves. It's kind of like, you know, Mike, for a running example, right? If you run at the same pace every single day, or the same route at the same pace every single day, the same amount of time every single day, you're not really going to grow anymore. You're going to become stagnant. And when you become stagnant in trading, it can be dangerous, because market conditions are always changing, and they may outgrow you, and you might start going backwards and not even notice it. So I think you always need to kind of test yourself, run a little bit faster, run a little bit further, put a little bit more weight on it, or switch the workout up entirely just to kind of keep you alive. And I think trading is the same way. So me, I'm a student of the game. Like I dedicate a certain time in the year each year to what I call continued education, where
Cool.
I just learned something. Like it could be I learned Elliott waves years back. I learned about volume, like stuff maybe I don't even intend on using. I just learn it, or I'll go on like a strategy development journey where I start looking at the markets and I'm like, wonder if I can build a strategy. And like 9 times out of like 10, they never come out to fruition. But it's that exercise of like doing something different. I feel alive. I feel stimulated, and it keeps me sharp. And in many cases, even helps my the stuff that fails, right? Maybe I learned something and it helps the trading style that I do. So it's, you always got to stimulate yourself and find different ways to stay sharp and feel alive, because you don't want to go backwards in these markets.
Absolutely. And you have a dedicated time for when you're going to do this kind of education.
Yes. Yep.
Do you have a, you have a dedicated time? Do you have a dedicated period of the year? Like I'm a big watcher of seasonality.
Mhm.
And there's certain times of the year where things are slower in the markets than others. Do you plan around those slow periods in the market to do your additional education?
Yes, 100%. So for me, it's typically it's always in the winter. So after Thanksgiving, during the Christmas holidays, because I can care less about the markets in December for the most part, maybe like the first couple weeks. But once you get around the holiday season, it's there's not much that I really want to be involved in. And then the summer as well. There's usually a summer slowdown where it doesn't necessarily mean bad trading, but things are a little bit slower. This has been a exciting summer because there's so much going on. But usually those times are best for me. Plus, during the winter break and during the summer break, I also have a break from track and field if the kids are on summer vacation or winter vacation. So I just have a lot more time that opens up for me to kind of use it. So it's kind of cool that it kind of works in the same area.
Oh, that's great. Both of you, and I try to do the same thing too, having these dedicated times. And I think that that's an important thing to highlight, because if you don't have dedicated periods and you're just kind of learning here and there, and you're all over the place, then it could be very easy for education to become a distraction, if that makes sense.
Yeah. So yeah, I had a really young man this past week who we were talking specifically about that because he's going to become an AutoPilot trading member, and he was listening to because I also host the Bay Area Moneymakers, which is an IBD meetup group, right? And I had a really good guy, Lee Tanner, on. Really, Lee's a brilliant trader, been one for a long time, but he was getting into complexity. And this young man told me, Dennis, I had to turn it off. I had to turn it off. And I give the young man kudos. He goes, I had to turn it off because what was being presented was overload with what I needed to be learning right now, which I needed to be learning your system and become a master of that. And I went, whoa, he's the first guy in 15 years that has said, oh yeah, I had to shut off the noise. And he's going to do really well.
Yeah, that's a great lesson to learn.
Yeah.
That's a great lesson to learn. Not too many people learn that one.
Yeah. Even me. I mean, gosh, you just so much of, my first 10 years of trading, I was that stubborn, egotistical guy. I was a jet pilot in the Navy, and all this stuff that, and so I thought I was pretty hot stuff. And I look, an engineers are sometimes the worst. They really are. They get on top of their ivory tower and they think, oh, I'm brilliant and I'm going to recreate this trading system. And the dumbasses, if they would just basically just follow the simple processes. And that's what I finally came back to and started developing about 15 plus years ago, the clear and simple process, making it simple, all my rules on one page. But one of the things, I want to go back to the Dunning-Kruger effect just really quick. What strategies, Akil, would you suggest for traders to implement to overcome the overconfidence or self-doubt associated with Dunning-Kruger, especially when they get to the valley of despair, which so many people turn back from to chase the Holy Grail? Well, that was a really good question.
That's yeah, that is. I'm like my gears are churning. I think I think a lot of it goes into self-reflection. I look at my journey and when I hit that valley of despair, and I was, I was overconfident in the market. I didn't think I was the smartest person out there, very far from an engineer, but I was overconfident. I did really good in the stock market when I first got started, and I'm like, I'll figure this out. I'm smart enough, and it just didn't work. And I remember blaming everyone but myself. And then I ran out of people to blame. And I remember looking in the mirror one day, and I don't know what I was doing. Probably the day I just was about to blame someone. I was like, that doesn't make any sense. And I just said it was me. It's me. And I started asking myself, okay, it's not my strategy. I went back to my numbers. It's me. And I did an A/B split test where I took the results from my trading strategy and what they actually were, and I compared them to what they should have been if I did everything correctly. And I said, oh crap, like this is a profitable strategy. It's me. I'm the one messing it up. And then I kind of reverse engineered from there, where I started identifying what was causing me to lose money. Well, it was mistakes. And then identifying, okay, what were those mistakes? And I remember the turning moment in my trading is I made this goal. I said, okay, I'm probably making like 30 mistakes a month. I'm not going to eliminate 30 at all or all at once. That's just impossible, right? I learned that from sports. If coach tells you 80 things to fix, you're not fixing 80 at once. I said, January, I'm going to at least make one less mistake. So I want to end January with at least 29 mistakes, but not 30. And then I just kept working that number from there. So whatever I had in January, let's say I had 25, my February goal was like, okay, no more than 24. 24 is the max. And then I started throwing in, trying not to make the same mistake twice. So if I like moved the stop loss back because I was scared, okay, no moving stop losses back. And it's funny you talk about AutoPilot. I kind of got on AutoPilot. I forgot I was eliminating mistakes, or I forgot really about my trading. And my whole focus was on don't make mistakes, don't make mistakes, don't make mistakes. And I remember this was the coolest part of my journey, where you get the broker statement every month. So I got the email and I clicked at it, whatever. I'm used to seeing things in parentheses, right? And meaning that you lost the money. And I remember I looked at it and I'm like, there's no parentheses here. And I remember I emailed my broker. I'm like, hey, I think you sent me the wrong statement. Like, just as a heads up, like someone out there made some money and they probably don't know about it. And they emailed me back, hey, Akil Stokes, account number, blah, 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 blah. Yeah, this was your profit for the month. And I was like, positive? What? What? And it came to me. I'm like, man, my trading got fixed, not by necessarily doing something super secret with my strategy. I just stopped stepping on my own feet. I became more humble. I really locked in on the process. I discovered what was holding me back. And I became on autopilot for what I was supposed to do in the markets. And the result was profit. And that belief hasn't left me. It was that one moment where I had that belief. I'm like, this is what it takes. And I've never looked back from then.
That's fantastic.
Cool. So, hey, Mike, do you see that Mike and I go off of a list of questions, and so we're.
Oh yeah. I see there. Okay, so you initially started with stocks, is that right?
Yep.
And then later on transitioned to Forex. So what prompted the switch in your trading focus? And as a follow-up to that, how did this change impact your trading strategies and overall approach to the markets?
Well, to answer the first part, greed and overconfidence. I did good in the stock market, and again to this day, a little bit of good luck, a little bit of good timing. I'm suppose there's skill in there, but because I didn't know then what I know now, it's hard for me to admit that. But the problem with stocks was it took a lot of money to make a little bit of money, and because I had a limited amount of capital, I was limited. So of course, someone told me about the Forex market. I tried penny stocks as well, which was horrible. But someone told me about the Forex market, and they said, hey, you can start with less and you can earn more in a quicker period of time. And I was like, yeah, like that's everything I want to hear.
Yeah,
And
that
of course,
sounds
a little
pretty
bit and the overconfidence in me was like, oh, I did it in the stock market in whatever amount of months. I'll just do the same thing in Forex, and a completely different game. For one, when I went into Forex trading and learning about it, it was more technical analysis than fundamental analysis, which I knew nothing about technical analysis. I didn't know what a candlestick was. I've been looking at a line chart in the stock market. So it was a complete kind of relearning and a lot of battles with admitting that I needed to learn versus like, I'll just figure it out. It was a full switch from one side of the realm to the other, investing to trading, fundamentals to technicals, a full 180.
Wow.
So, let me see.
Say real quick, just a funny story about I didn't know what Forex was. When I first heard about it, foreign exchange, my friend told me about it. I thought only foreign exchange I knew was like in the airports where you change your currency. So I swear to God, I thought we were going to be carrying like duffel bags full of money into the airport and like sitting in front of the desk and like timing it and then like pushing it and give me euros and exchanging it like that. I had no idea what foreign exchange was. I said, that sounds pretty shady. Are we going to get in trouble? And then this is how naive I was about the Forex market.
So what are some of the key similarities and differences between swing trading, like you were doing, and Forex trading? Walk us through your daily routine for your Forex.
So honestly, I believe all markets move the same in from a macro perspective, meaning they go up, they go down, they go sideways, they put in classic patterns, they have extensions, they have pullbacks. Now, different markets have different tendencies. Stock markets have different personality in the Forex market. Individual stocks within the stock market have a different personality in the Forex market. Individual pairs within the Forex market have different personalities than other pairs. So it does take time to kind of learn the intricacies of what you're actually trading. But in general, yeah, my routine is the same. I'm a believer in top-down analysis. So I like to start off on a higher time frame and kind of get the lay of the land, judge from afar on top of the cliff and see what the bigger picture is going on. And then once that bigger picture shows me an idea of kind of a directional bias, meaning, I think we should be bearish, or I think we should be bullish, or hey, we're in a pullback and I think that pullback should come to this level, or hey, we're in an extension, the relief should come at this level. Once I kind of ID what my idea is, then I go down to the lower time frame to get a little bit more detailed look at it, and then look for reasons for entries and all of that stuff. So I'm a price action trader. It's looking at a candlestick chart, classic price action patterns, advanced pattern formations, some indicators just for support, but it's structure, I guess you could say, is the structure of supply and demand is the backbone of my trading.
Cool.
So how about those coaching athletes versus coaching traders? How about that question?
Yeah, I think it's time we can get into that.
All right, great. So earlier, though, we were talking about athletes and telling athletes that they did it and whether they were right or wrong. So there's this in sport. There's more of this natural third party, right? Like you're a coach, you're coaching the team, and you're able to see it. But as a trader, you don't always have that part of it, right? Unless if you're somebody that hires a coach, like people that jump into tier 1, or people that jump into AutoPilot, or people that come over to Tamara. But for the people that don't have that yet, what can they do?
Yeah, it's tough to. That's the hard part about trading. The cool thing about trading is you're independent, your freedom. You can do what you want, for better or for worse. The bad part is there's no one to kind of judge and critique you. Like I said, there's no one really looking over your shoulder saying, hey, don't do that, or hey, I would do this differently, unless you're working with a coach or a community or a mentor or something like that. And athletes, it's the same way. And we notice this a lot during really the summer training. So around this time, where I give them very specific workouts on what to do, but there's a big difference between what they're accomplishing on their own versus when coach is there. Because I can give them critique where say, okay, like, hey, you ran that a little bit too fast, or your leg should be doing this, or some technical analysis of them, and then they can go in the next rep and fix it. So they get that kind of back and forth of like, I do something, I learn something, I fix it, I improve. I do something, I learn something, I fix it, I improve. And that just makes the learning curve go so much quicker. As traders, we don't have that luxury if we're on our own. We kind of have to learn things the hard way. Or even if we're very disciplined, which most traders aren't, and we're doing like journaling and reviewing and kind of analyzing our trade breakdown, it's difficult because we just have one perspective. And honestly, you get better feedback when you can share ideas with a mentor, with a coach, with a community, like a mastermind group, stuff like that. So I think it's massively beneficial for a trader to surround themselves around something that's going to give them accountability, just so they continue to do what they're supposed to do, but also something that's going to allow them to try to kind of catch anything that slips in between the cracks. And it's very similar to athletics in that aspect.
When you coach your young people at the college there, and Akil coaches at Millersville.
Yep, that's correct.
In Pennsylvania, right?
Yep.
What town?
Lancaster. Well, technically it's Millersville, Lancaster, Pennsylvania, Lancaster County. So it's about an hour and a half from Philly.
Okay. Yeah, my son actually went back there and did a one semester study, not a study abroad, but I'm from Hawaii, and so so he went there and really had a great time.
Oh, nice.
But the question is, how do you prep? I know that there's a huge aspect today and has gone on for the last 30 years where you prep athletes not only physically, but also mentally. And so there's a bridge across, as we saw with Mark Douglas and a lot of the people trading the edge, of bringing that mental side. And of course, Mike in his book on the trader mindset is talks about the mental side of trading. So what from the athletic coaching field have you brought across to your coaching for trading in the area of mental mindset? Also, how do you teach them to rehearse? Do you teach them to visualize their trades? Anyway, go ahead. It's just, what have you brought across, Akil?
Yeah, so there's a lot of commonalities between the two. I'm trying to think of maybe three things I can give you. I think one is process over outcome. So make the goal is not the result. The goal is doing things the right way and trusting if you do things the right way, you'll eventually get the outcome that you require. And in trading, we know that trading is a game of probabilities, right? So we're not going to win every single trade, but if we have a system, if it has an edge and we consistently follow it the way we're supposed to, we should be able to extract profits from the market. And with my athletes, training is the same way, where it's like our goal, our end goal is the championship event at the end of the year. So everything we do throughout the season is preparing them for that. With that being said, they're not going to run or jump a personal best at every meet. Every meet isn't going to be an improvement. There's going to be times where it's cold, it's windy, we have a heavy weightlifting day during the week or a hard workout. They're just not going to be in tip-top shape. And it's explaining to them like, hey, I don't need you to be, quote unquote, your best every single meet. What you need to do is focus on the plan that we laid out, whether it's, running the first half of a race a certain way, or whether it's something technical like a long jumper, like, hey, we want to get off the board the right way. we're focusing on dialing down on this process, dialing down on this routine, and then bigger picture, you're going to be able to get the result that you wanted. That's one thing. And another thing is having a short memory, kind of going down that same path where, athletes, they get pissed off when they don't perform well. And, in many competitions, they have multiple events. So they may run an event and they may have another one later, and they're sitting there moping and soaking and mad at themselves. And I'll go up and tell them, I say, hey, you have 5 minutes. You can be pissed off. You can yell and scream and break stuff and curse me out. But I'm going to come back in 5 minutes, and we need to reset, and we need to start thinking about what we're going to do with our next event. And trading, that's the same thing I did in trading. I used to have a playlist, right, back in the day, because I found myself getting highly emotional over wins. I would get super excited, and then that would lead to overconfidence. And then if it lost, I would get super angry. Then I'd be scared to enter the next trade or want to get revenge. So I had a playlist. There was, depending on the outcome, like win or loss. And after my trade, I would pop that playlist in, push play, turn the screens off, dance around the apartment and air guitar, whatever I need to do. But I told myself, once those 2 songs were done, I had to forget about everything I did before and focus on the next trade. And that was something that kind of helped me kind of just find balance and get back to it. So I think that's another thing that could be very useful for both sports and trading.
What a great reset. What a great reset that is.
Yeah, yep. I had no idea what I was doing back then either. It was just something that felt good. It wasn't until later and listening to you guys where I found out, like, this is actually a psychological thing. Like, this is a technique. For me, I don't know what it was. It was just like I would rage out and I would just feel better after I raged out. I want to say I'm a genius, but it's just cool to see those habits even when you don't know what you're not doing.
Great. That's an awesome response. Go ahead, Mike.
Well, so how can traders achieve profitability without a high winning percentage?
Ooh, I saw this another one for you guys, right? I believe you did a podcast on this about winning percentage, and I guess how to be super big, or at least a discussion on Twitter maybe. But yeah, it goes back to the odds conversation about. I think a big myth is that to be a successful trader, we need to win all of the time, and a lot of that stems from everything else we do in life, right? In life, if you want to pass your test in school, you need to get 90%, 80%, 70%. You need to win more than you lose, right? So we're kind of, we are used to thinking that we need to get more right than wrong is good. We get more wrong than right, that's bad. And trading, there's another element to that, because it's not just your win percentage, but it's the amount you make when you win. It's the amount you lose when you lose. And there's a fine kind of balance of where that's profitable, where it's not profitable, and whatnot. I think the best way to break that myth is run the numbers yourself, right? And you can, if you have numbers like back tested numbers, you can look at those numbers and see if it's profitable or not that way. If you don't have back tested numbers, you can kind of just make them up just to get that idea. Say, hey, if I take 10 trades and my average win is $100 and my average loss is $10. If I win 1 out of those 10 trades, what does it look like? If I win 2 out of those 10 trades, what does it look like? What if I win 3 out of those 10 trades? And you start to see, like, wait a minute, I won this little and I'm still profitable. And then that can kind of open the door to believing it more. Now, I do think there's a psychological element to it too. Like, I can never be a 10% trader. I will go crazy and insane and break all my rules. I'm just not, I don't think I'm built for that. I know some very disciplined people, not me. So I need to be, I understand my threshold is probably like, I would say mid 30s is probably the lowest I can go before I go crazy. I haven't tested that theory, nor do I want to. So, but yeah, I think if you just run the numbers, and again, like, I would challenge you guys to make the numbers up. Just do the example, like I said, hey, every win is $50, every loss is $10, and see what that balance looks like as you win more or win less. You'll start to believe that, man, I don't need to be an 80% trader to be a profitable trader.
Yeah, right on. Whew. That is so rich from the aspect of understanding. And I think I love working with folks when they see the light bulb go on, where you say, okay, if you're a 3 to 1 reward risk trader, you only need to win like 35 to 40, 35%, 20, or even 30% of the time. And when their light bulb goes on, they go, oh, and then shifting away from the good or bad trades, basically raking it on, I grade how well I executed my process, my system, my trading plan. That's what I get graded on, not on whether, because I have a losing trade. As long as I'm staying within the parameters of my system, I'm okay with that. And I can have 5 of them in a row, and it's okay. Because you know what? I know long term, my system, what it does every year, and has done so for the last 13 years. I know what it does every year, as long as I keep doing the same thing again and again and again. Trading great stocks, and I do great stocks and ETFs. I mean, that's where my swing trading prowess comes from. So, Mike, what else we got here, Mike? Did we save the hard questions to last?
Oh.
I think so. We'll see. Tell us, what are some of the common mistakes traders make when they prioritize win percentage over some of the other aspects of trading?
I would say one is, really it's a lot. You put so much pressure on yourself to win a lot. And it's hard to need to win that much in the market. It's weird, like I mentioned, with a 3-to-1 and needing to win. If you can win 35% of the time, you're great. There's a lot less pressure that comes with that. It sounds weird if you're not in the know, but it's soothing to understand. Like, I can lose 5 times in a row, and it's okay. Like instead of like, yeah, if I lose 5 times in a row, oh my gosh, the world's over. I'm panicking. But you see a lot of forcing of the issue. So I had this trader I worked with briefly, and this story will probably tell you why it was briefly. But his goal was to be a 90% trader. He's like, I want to develop a system that is 90%. And we had the whole talk like, well, you don't really, if you do that, that's awesome, but you don't need to. I think that's a really tough goal. I'm not going to discourage you, but if you try it and it ends up being 80%, that's great. If it ends up being 70%, that's great. But he's like, no, got to be 90%. And, after I stopped working with him, I remember he emailed me like probably a couple months later. And he was like, I finally did it. Said I achieved a 90% win rate for the month. I'm like, all right, that's awesome, man. He's like, but I lost money. And I'm like, what? Like, what? And what he was doing was, in order to win 90%, because it wasn't happening naturally, which I don't know of any traders that are going to consistently win 90% of the time, because it wasn't happening naturally. What he was doing is, every time a trade would go a little bit in his favor, he would just exit for profit and then jot it down as a win. But the losers were still full losses. So although he had, just to make the number simple, he had 9 wins, that one loss made up for those 9 wins, or took away those 9 wins. But he was so concerned with just like checking the 90% win box, where he didn't really care about being profitable. And that's when, we spoke about ego. That's when it's more ego than anything else. Like, the goal isn't to be like, haha, I beat the markets because I won more than I lost. The goal is to make profit. And I tried to explain to this guy, you didn't really beat the markets. The markets baited you. You think you beat the markets, but at the end of the day, they took your money. And, and I haven't heard from him since. I don't think he liked that very much. But
Akil, you're such a better coach than I am, because I would have told the guy, get your head out of your butt. You're just absolutely, your expectations are totally unrealistic, but that's just me. That's one thing that's nice about becoming the old guy, is I have no restrictions on what I say to anybody, because, hey.
I'm getting there. I feel you. I used to care a lot. I'm getting more and more towards not caring, and just like, this is what it is. Like,
and so, because sometimes it's best just to rip the Band-Aid off, so, hey, moving into the other myth that you wanted to address, which is the aspect of leverage, and people thinking that I have to, higher leverage means bigger profits or higher profits. What are some of the biggest misconception about leverage that you've encountered with your coaching?
So I think a lot of people, and particularly in the forex market, because we've gone through a lot of different things when it comes to leverage, but like the forex market when it was still newer to retail traders, when I first started off, the leverages out there were incredible. Like there's like 300 to 1, 200 to 1, like, and that's what I mentioned earlier about you have the ability to trade more with less. And I remember there came a time, it happened in the US first and then the UK later, where they cut the leverage and there was like, hey, we're no longer offering 100 to 1. It's only going to be a max of 50 to 1, or I think the UK might have went to 30 to 1, something like that. And I remember a lot of traders were panicking. They're like, well, how am I ever going to make money, and blah 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 blah. And I told them to think about this. Like, if you were ever using all 200 to 1 of your leverage, you probably don't have good risk management tactics. You're probably overtrading. If you're risking that much per a single trade, there are bigger issues than the leverage that you're getting. Because if you have smart risk management, right, you're not risking 20% a trade. You're going to die pretty quickly, right? You're risking somewhere at 1 to 3 max, I would say, maybe. And everyone's a little bit different, but like, you should be operating within, if you're operating with good risk management protocol, you should never use all of your leverage in the first place. It's very similar to like credit card, where it's like, hey, I've got a credit card limit of $50,000. So I went out and bought something for $45,000. I was like, why? Well, because I could. It's like, yeah, but that was dumb. Like, just because you have it doesn't mean you need to use it. You got to pay that back. And like, so I think the idea out there was that, and this was kind of the get rich quick stuff. Like, if I have more leverage, I can put more money on the table for a trade. If I can put more money on the table for a trade, I can win more. But then you understand that most traders aren't really winning as much as they thought, or they winning right away. And when you put all that money on the table and you lose, your account's gone and you don't have any chips left to play the game. So yeah, that was a big one that I dealt with, where people panicked over leverage. It was good, kind of an education period for them, where it's like, hey, if you focus on your risk management, go calculate your risk and tell me if you would ever need all of that leverage in the first place.
Cool. That's good.
Fantastic. Yeah, you just remind me of another quote that I remember from you, all about a chip in a chair.
Oh yeah, no, I got that from my mentor, who I think might have gotten that from a song somewhere. But yeah, if my mentor always told me, like, you want to have a chip in the chair. So if you play poker, as long as you have some money, and goes into managing risk, as long as you have some money, you can play the game. If you can play the game, you have a chance to kind of make money and dig yourself out of the hole. Once you don't have any money, they don't let you sit at that table. You can't just hang out there. You can't play the game. If you can't play the game, you can't make money. If you can't make money, you're done. And so I love that quote. Chip in the chair is risk management first.
Absolutely.
Don't go broke.
So what do you, here's a question I have is, there's a lot of people on social media, I call them the Lamborghini guys, who basically show these 1,000% gains and all that kind of stuff. Now I kind of sense that, yeah, they'll have the 1,000 or 2,000% gains, but their body of work sucks. Kind of like Kathy Wood.
Jeez.
Who, hey, did she not do an absolutely fabulous job of a pump and dump on Tesla? If you remember, about 6 weeks ago, she says it's going to $2,500, and she jumps in. And just as last week, she exited all her positions. And so I thought that was just a classic example of a pump and dump. But I mean, that's my Dennis's humble opinion, guys. But how do you bring value to the market for your members?
Well, we try to show them what a realistic view of trading looks like. And this was a really, really hard battle when I first started, because there were so many Lamborghini traders out there. And let's be honest, like, it's not sexy. It's people don't want to hear, hey, this is hard work. Hey, you got to put in hours. Hey, you're going to lose a lot. Like, they don't want to hear that. They want to hear, I'm going to be successful right away. I'm going to be able to buy this Lamborghini and this Tesla. I'm going to make 100% a month every month. And, you know, just like you was explaining, like, hey, I'm not calling these people liars. Like, you know, I'm not saying that someone didn't have a 50% return for a month, but look at the other 11 months and see what happened. How consistent is that? They're curve fitting. They're taking a snapshot of something and using that as a highlight reel, where you don't see the bigger picture. It's like a basketball game where someone does this amazing dunk and then it's like, oh yeah, but they lost the game. It's like, oh, you didn't tell me that part. So I think just the consistency and offering a realistic message is powerful. And I've always believed in, you know, even with our business and our company, it's not about attracting clients. It's not about attracting likes and views. It's about connecting with the right person. And if there's someone out there that wants that Lamborghini life and wants to make 100% a month or wants to be the 90% trader, like you said, we're just not the ones for them. And they will eventually kind of filter themselves out. Like when you keep telling them, no, that's not going to happen, then they'll find someone else that will kind of be there to tell them that they're yes man. They'll find someone else to tell them yes, and it's not your problem. So I've always just focused on that. You know, I know what the reality of trading looks like, not just for my own journey, but, you know, speaking to people like you, speaking to different people, successful traders across the industry. And it's funny that you say this because, you know, different successful traders, just like market wizards, right? We all trade different ways. We all trade different assets, but we all have the same underlying principle. And you will see that with every single successful trader. Like even you talk to people like Mike Bellafiore, it's the same underlying principles. So there's something there. And it's the goal is to be truthful to that and let people, you know, once they kind of spend their time with the fraudulent stuff and they come back to reality, let them know that there are people here to help when you're ready for that realistic view.
That's awesome. So
let's see. Well, Akil, how about this one? Why do many traders believe that using higher leverage will automatically lead to higher profits?
Yeah, it's kind of like I mentioned before. They just think that they have the ability to put more chips on the table, and with those type of traders probably assuming that trading is easy and they're gonna win more. They just see like, hey, this is like I'm making a big bet and this bet's gonna pay off and I'm gonna win this much. And unfortunately, that either doesn't happen or it does happen and they make a lot of money and then they get overconfident and then they do it again and they eventually lose and go broke. So the whole chip in the chair thing, where it's like they're not looking to trade, they're looking to win the lottery. Yes.
Yeah. Trading for all the wrong reasons.
Yeah, to get rich quick,
it's like that old country song, looking for love in all the wrong places. And so how can traders develop a sustainable trading strategy that doesn't rely on high leverage to achieve profitability? And give us a couple of practical steps on building a strategy or a system.
Yeah, sure. The first thing you need to do is become educated in what I call the foundational elements. Again, whether it's technical or fundamental, there are some basic things that you need to learn. You know, what makes the market moves? How do the market moves? You know, what's important? If you're an indicator person, you know, understanding how your indicator works. It sickens me to see people use indicators and they don't even know what the indicator is indicating, right? Like it's like it's know what you're being told or what signals you're looking for. And then after that is really adapting your strategy. I think you want to trade something that meets your personality, meaning that if you're highly against indicators, don't adapt the indicator-based strategy. If you're highly against price action, don't trade price action because you're not going to believe it 100%. And then when it comes time to trade it, if you don't believe it, you're going to hesitate and make mistakes. I think you have to adapt your trading style to something that you believe in. And when it goes on the journey, I would say there's two parts. You can either pick up something that already exists, right? There are plenty of traders that have systems that are already developed, tested. Pick it up. Always test it for yourself, right? Or at least, you know, do your research on it. And then if not everything needs to be tweaked, right? But if something needs to be tweaked, maybe for your lifestyle, you can only trade certain times of the day or not in front of your chart at this time or whatever it may be, make those adjustments without reinventing the wheel. And like you mentioned earlier, I think too many traders say, wow, this system is awesome. It's profitable. Let me take everything that makes it profitable out and put in new stuff so it's mine. It's like, who cares if it's yours? Like, it should make money. So it's either doing that, taking something that already exists and researching it and using it, maybe making small tweaks based on, lifestyle or whatever your situation is, or it's using kind of those foundational elements of what you learned and developing something on your own. And then after you do that, you develop, tweak, you take it through the back testing process, whether it's manual or automated, and you prove that it is profitable over different market conditions. And then you move on to trading it to the best of your ability without making mistakes, and just try to grow. Your newer traders are going to make mistakes. You're going to have setbacks, and just try to limit them as best as you can.
I love it. So, Akil, what questions would you like to ask ask Mike or I?
Ooh, that's a good one. I guess I would say this: what is the most common struggle you see with the traders you work with? Like, what is the biggest obstacle that you typically have to help them get over?
Go ahead, Mike.
Yeah, I think that one of the more common things that people need to get over is wanting to throw everything in the kitchen sink into a trade. So if something is more robust, right? Like this idea that if I add not just indicators, but if I know the story more, and if I know this about the fundamentals, and if I know this about the market, then this is going to create a more robust analysis. And because I know this company so well, I'll be able to hold through whatever the market throws at me. And, sometimes that works, but when it doesn't work, then you're down. You could be down 30%, 40%, 50%. Well, I believe that this thing is going to go up. Well, if the stock is so great, why isn't it going up?
That's good.
Married to their ideas. Yeah.
Right on. Yeah. What I think IBD says on some of their rules for their trading, they basically say, it's okay to date the stock, but you don't want to marry it. I mean, that's very true. Yeah. And for me, I think one of the biggest struggle traders have is moving from the I want to I will. And what I mean by that is folks can, want, they say, I would give anything in the world if I could trade like you. And that is a bold-faced lie, because oftentimes they are not willing, because it takes a willingness to move from I want to I will. And then once you get that I will mentality, come hell or high water, you're going to succeed and find the tools to help you succeed. So that's kind of like, once I can get people to the I will stage, then they become coachable.
I love that. I love that. I see that so many times where people talk the talk, and then when times take action, it's like,
yeah,
like, you mean I have to invest energy and time? And I don't know if I'd love that. I want, exactly. I will.
Yeah. Great. So Mike and Akil, we have come to the end of today. And Akil, I want to say thank you so much. I want to just say a blessing on both you, your family. You have 2 sons, I think, right?
Yep.
And I absolutely love the pictures of them that you post of them playing soccer. They have the most beautiful. They seem like they are so happy with life. I mean, they have great smiles. I mean, I love it. And so they take after their dad. And of course, their mom probably has a great smile too.
Yep, they get their looks from their mom. I'll tell you that.
And anyway, and so any last and finals from you, Mike?
Yeah, no, I think that this has been fantastic. If you could tell people once again best ways to get in contact with you for more information.
Yeah, you could head over to www.tier1trading.com. That's our website. And I also have a podcast called the Trading Coach Podcast. You can listen to that on any of your podcast apps. And yeah, it's I just want to say I appreciate you guys having me on here. This was it's an hour went by already, and it seemed like 20 minutes. So it's been a great conversation, and it always helps me learn to hear from experienced people in the market. And so I really appreciate the opportunity to be here. So this was awesome.
Awesome.
Likewise.
Thank you, Akil. And so, hey guys, if you're watching tonight, you know, do us a favor. Mike and I have a goal of reaching 100,000 people with the message of trading truths. So basically, where we debunk the market myths, but also for a even more important reason, we want to share our, you know, what else is in our life, and we can share, you know, talk to you more about that later, but get the word out. Trading Truths is going to be one of the best podcasts. And so if you are a trader, if you have some notoriety, you want to be on this show, because, you know, don't be last to the party, because we've got a lot of people, and like Akil, who is, you know, we've had some great guests, and, you know, we want to have more great guests. And so I'm going to shout out right now to Mike Webster. Mike Webster, you need to be on this show. And, you know, we've talked about it before. It's time. Come on, Webby, let's go. So, Mike, you know him. And was that bold or what? But
yeah, I think I'm going to cut this segment out and send it to him.
And because, you know, the thing about it, if you don't speak it out, it's never going to happen, you know? So anyway, aloha, God bless everybody. And that's it for today. Akil, hang on.
Bye, everybody.